Hi, I'm Kevin Duffy from Tax, Wealth, and Financial Services. And I'm here today with my son Kevin, who is a police officer with 11 years experience in law enforcement. First responders have unique financial needs to plan for, such as early retirement, deferred compensation, and pensions. There are needs today between municipal workers, government workers, state police officers. They all have different needs for early retirement, or I should say their contracts dictate different needs they may have. Can you tell me a little more about what you see and the people you deal with, what's in their contracts and how it impacts their lifestyle?
Yeah, absolutely. So, I mean, every municipality, every department, everybody for the most part has different contracts that they negotiate with their individual employer, municipality, whatever it may be. So, while one department may have certain stipulations with medical upon retirement, another department may not.
Situation like what?
Whether the department or your employer is going to cover you in retirement with medical, full medical, if you have to contribute to it, if it's covered completely. And this is something you really have to consider, financially when you're planning out your pension and everything. So you have to factor in what's going to be deducted for your medical expenses. Are you going to be even having any money come into your wallet, or is it all going to go to your medical? These are things you have to consider.
All right, so it's medical, and then it's also, they have investments as far as what they're allowed to investing. They have Section 125 plans, they have 457Bs. What other plans are out there that you're aware of? Does every municipality or every contract with law enforcement have the same?
They don't all have the same. There are similar ones, 457 plans, 401ks. It depends on your individual contract you negotiate with your employer. There are definitely vehicles that you should absolutely invest in the second you come onto your job, whether it may be, as a police officer, firefighter, EMS, whatever it is. These are things you should start contributing right away. Because as soon as that money goes in the first day you're employed, you don't miss it. So when you have 10, 15, 20 years on, you're still not missing that money. However, when the time comes for retirement, or 10, 15 years after retirement, that money's there. It's been compounding since day one.
So everyone has a different contract, they have different investment vehicles. How do these people, who do they go to learn about these investments?
Well, they need to really seek a financial advisor to educate them on some of this stuff.
The union reps don't talk to about the municipalities. Do they sit down and explain the contracts, what's in there?
It's hard to say. Some may do, some may not. Some may just say, here's the plans that are available to you. Take a look at them and figure it out yourself. Some may have people come in and speak to them about these plans.
The people that come to you as a union representative, are they all aware of what's inside their vehicles that they're allowed to do, or they ask you different questions?
Some are, some aren't. I happen to know a fairly decent amount about the topics, and I give my opinion to people, but everyone should absolutely seek out a financial planner, financial advisor when they're planning out these things. If you're financially savvy and you want to make these investments on your own, then more power to you. But with something, when you're dealing with your future, especially when you're thinking about those crucial years, your 60s, 70s, 80s, you really want to have a professional sit down and look at your money to make sure that it's going to carry you, well into your retirement and, if you live past your life expectancy.
How many people come up to you and say, I'm not concerned about health insurance when I retire?
Well, a lot of younger people in the field aren't so much concerned about that because, statistically, for the most part, people in their early 20s are in, they're in decent health, decent shape, and they're not concerned about, 30, 40 years ahead.
So if they retire at 40 or 50 and they have children and they're going without health insurance, are they aware of this? Are they aware of the situation they have to consider?
Well, they should be aware of it, and that's something. You have to plan for the future. You can't just base your decisions off of, hey, I'm making a ton of money in my early 20s. I don't need to be concerned about health. I'm healthy. I don't need to go to the doctor. But maybe 10 years from now, something happens. You may get injured. You may get cancer. You never know. And these are things you have to plan for because the unexpected should always be expected. You can't plan for these things, but they may happen.
How many seminars do you see different municipalities offer educating them on the different things that are inside the contract? Do you see many of that being offered? Or do you see people taking advantage of things that are being offered to help?
They're always offered. It depends on if people want to go and actually take advantage of it. For the most part, most municipalities will offer some kind of education on it. It's just a matter of the people that are employed there taking advantage of these sessions. And again, it's just education because you may not be aware of how in-depth these things go and what's available to you and the resources you have.
Let me ask you a question. How many of them attend the meetings hear what's being said about what's available to them, and walk out and don't ask questions because they feel, I don't want to sound stupid because I really don't understand what's being said.
If you have 100 people attend the meeting, probably 50 are going to listen to what you're saying. And out of those 50, probably about 15 of them are actually really going to pay attention and act on it. And maybe out of those 15, maybe 5 of them don't do anything. And maybe you'll probably have about 10 that actually take action and will consult that financial planner or whoever's speaking to them and really take advantage of what's being proposed.
Yeah, I found with most people, when something's put on the table, they don't want to feel foolish and ask the questions, but I encourage them, if you don't ask the questions, you're never going to understand what's really available to you. I've seen a lot of contracts. There's a lot of perks that are available inside the contracts, and either one, they don't take advantage of because they're not aware of it, or two, they're afraid to ask the question, how does it really work? Because they don't want to feel like they're uneducated on something. And that's, I feel, is the biggest mistake people make in financial planning.
Well, I mean, people too, yeah, you may not want to raise your hand and ask something that you may think is stupid, but I guarantee you that there's probably at least, 5, 10 other people that have that same question that are in the same boat as you. So, and if that's the case, fine. You don't want to ask in front of everybody, that's fine too, but you should absolutely take advantage of whoever's giving that presentation. Like for you, for example, absolutely take advantage after the fact, the next day maybe give that guy a call and have a one-on-one conversation so you don't sound stupid in front of everybody.
Meeting your individual needs, maintaining your lifestyle, covering your medical expenses, preparing for long-term care, and protecting your legacy are crucial to you enjoying a successful retirement. Subscribe to my YouTube channel to learn more about the components of financial planning specific to first responders. Let's discuss your plan and make sure you are set up to reach your financial goals. Click on the link below to make an appointment or call my cell at 732-910-9207. I look forward to hearing from you.